Hey everybody, this is John and welcome to the free video. It is Friday evening, about 8:30 Central. I did have a family vacation this weekend, which included a plane trip on Friday, which this time it did not result in a reversal. It actually had a continuation, kind of an action on it. So in the premium video tonight, I'm going to talk about what I think is the biggest danger essentially to the world economy, which is the rising dollar. And essentially how that's going to suck inflows out of the emerging economies, kill the carry trade, and could bring a lot of nasty things, especially to the price of oil. But that's just heads up for those of you that are in the premium looking at the premium video later. But for the free video, what I want to look at is just stepping back and looking at the SPX and just looking at two things. One, what is on Monday and Tuesday, what are the best and highest probability trades that we can place to make money from the markets? Like, it doesn't matter what's going on, right? If you really want to get into that trader perspective, it just doesn't matter if the market's going down or it's going up. What is the highest probability trade, and is that trade more directional or more income based? Okay, and that's really what we want to look at. And then we'll also just take a look at going back to the theme of what are the main stocks in this type of market to focus on. And it's going to depend on what you're doing. If you're looking at the markets full time and you like kind of the whipsaws back and forth, because there is a niche for that, that's one thing. But if you're kind of like, you know what, I want a less stressful trading experience, then what do? So first, let's look at the S&Ps and let's look at Apple. So for the SPX, we've had a remarkable rally here. Now it's been on light volume, just kind of like what it was here. So that leaves it suspect, but you don't want to fight this, obviously. I give kudos to the bulls. What I was initially looking for was we would get the rally back up here, and then we would get at least a steeper decline and more of a battle. But with talk of QE being extended and talk of interest rates essentially, even going lower, bulls kind of had the upper hand here. Now, we've got to point out, of course, that the put call here is incredibly low. Anytime that's happened, when it's gotten to this level before, we've seen just kind of more of a topping formation. But that doesn't mean we want to fight this, right? At this point in my mind, if we actually get a solid close above 1970, then we're going straight to 2041, essentially that fire line. If we are looking at this, and I mean, this is to me is bear's last stand, for the S&Ps. But let's come back here now and just say, like, okay, regardless of what the market does, what are the what kind of stuff do we want to do here? And one of the things that I like in terms of directional trades here, of course, and I do like to see a squeeze. That's always helpful. And I also like to see when you see markets breaking out here with a neutral put call ratio. Okay, for Apple, that's neutral. That's, this is going to be, you can see the extremes here. But also you can see implied volatility really just coming low. It just means there's no nervousness in the stock. And that's actually a good thing for more directional stuff. So one of the things that, like for last week we did on Apple was some butterflies. And one of the questions I always get with butterflies, now we did 2 for earnings. We only had to pay for each one of these 8 cents. So you're risking 8 cents on the call side, 8 cents, so $8 per option on the call side, and then on the put side with a payoff of 12 times that on a per contract basis. And this time we were looking for a 105 pin, and we got it. We got pretty close to that. So the question becomes up, well, what about the in-the-money call? Is that something you could just take assignment on instead of trying to get out of it? Because sometimes it's hard to get out of these. The market makers try to screw you, and they'll add like an extra 20, 30 cents to it. And the answer is absolutely you can take delivery on a strong stock and try to, just kind of eke a little bit more out of it, which is great. So the butterflies, I love the butterflies in this type of environment as an income type trade, okay? Because the debit that you incur is in many cases minimal. I mean, just very, very small with a nice payoff, but also as the added bonus, the ability to take delivery of the stock and continue to manage that and then flip it out at a later date. And it's just one of what I have found is that in this kind of a market, it's really not about just having one strategy. It's like, okay, I'm going to do directional when this happens, or I'm going to sell an iron condor when this happens. It's really having access to a plethora of things that you can kind of roll into. And this is an example, like, hey, start off with a low risk butterfly, and if it works, having the ability to leg into it, or starting off with, say, selling a put credit spread or even a call credit spread, and then being able to defend it by actually legging into a butterfly with it, and then suddenly you've protected all your gains. Because that's one of the toughest things in this market, is that you've got all these profits, and then the next morning you wake up and the market's down like 30 points. How do you do that? That's all about knowing the different income strategies that you can do and the different adjustments that you can make. Okay, so this past Saturday, Bruce did his class for essentially teaching all of the income strategies that I was just talking about, but more importantly, doing those adjustments so you can lock in profits and adapt to these changing market conditions. So simpleroptions.com/insider. Now, if you're seeing this and you didn't take the Saturday class, you've missed it. However, there is still an opportunity to do a week-long mentorship with Bruce. It starts on Monday. And of course, you'd still get a recording of the Saturday class. Now, we had some of the comments that we had from this class, and it was just blew through everybody's expectations, was Jerry said, Bruce, wonderful presentation. Looking forward to Monday. Greg, excellent presentation. Did not know how to set up and use calendars or butterflies before. Thanks so much. See you in class on Monday. Dewey, thanks, Bruce. Lots of great information. George, thanks for an amazingly well-organized, comprehensive offering, Bruce. Rick, fantastic class, Bruce. What a great plan for consistent monthly income. Just what I was looking for. Very much looking forward to next week. And the list goes on and on and on. So we got some extremely positive comments just from the Saturday class, and for people looking forward to the week-long mentorship that's coming up starting this week. Now, you still have an opportunity to make a difference in your own trading by taking a shot at this. The mentorship, and Bruce just did a 3-day live mentorship back over the summer in Vegas, which was $2,500. This one is a full week, and since it's online, it's only $997, and this does include a recording at this point of the Saturday class. And this is something where you can actually sit there and look at all the different things that Bruce is doing in this market environment and gain more tools to navigate through this market. And the stuff that's coming down the pipeline that I'm seeing in terms of the volatility and the unwinding of the carry trade in the emerging markets is going to mean that the traders that have the most knowledge are going to win this game. And if you do not understand how to utilize the Greeks to do adjustments in your trades, you are going to be at a distinct disadvantage. Bruce is the guy that can teach you how to do that. All right? You guys have a fantastic trading week, and we'll see you at the next update.